pillar number 4 is going to be the property itself. Okay, there's going to be the major milestone in this pillar is going to be the appraisal, and we talked a little bit about that in our previous section, in our previous video. But the appraisal is a third-party professional opinion of the value of the home. And how the appraisal is done is that the appraiser goes out to visit the property, and they'll take photos. Actually, I had an appraiser come to my house this morning. It was done in 5 minutes. It was super fast.
Like, good, bye.
Yeah, it was a hi, bye. But yeah, what she does or he does is that they then look at the comps. And typically what they look for is the last 6 months of sold comps. Of similar size, similar structure, of similar properties, and they'll determine a value based off of that. Now, sometimes the comps are harder to find, as you know, Marina. Sometimes it's super easy, and it just really depends on your neighborhood, that you're looking at to buy. But the appraisal is going to be the key factor. Sometimes appraisals can take up to 2 weeks. Sometimes you get them back the same day, so it just really depends on the schedule of the appraiser. But once the bank has that document or report back, then they'll say, okay, we know the value of the home, and we're able to lend on the value of the home or the sales price, whichever is less. So
yeah, that's good.
Yeah.
And just to know, it's like sometimes we'll get a low appraisal, right? Like you said, going short. So what do you do? Oh my gosh, it's not going to be a value. Like, one, we can negotiate, but we can also rebuttal the appraiser to say, hey, actually, did you consider these other properties that we found for you? Or here's a list of all the repairs that the seller's made, so it's actually more valuable than you think. And so just realizing, like, it's not a be-all, end-all, that there's definitely some flexibility, but it's a good benchmark to be like, hey, what we're buying is actually worth this. So someone is fact-checking that. And just making sure that we're solid from there on.
And of course, it's a professional opinion of an individual. So, if you completely disagree and you've tried the reconsideration of value, which is the rebuttal, and let's say all else fails, in some loan types, you can order a second appraisal. Some loan types you cannot, and you're kind of stuck with it. But there are ways that don't necessarily cost money that you can try to get that value of the home higher, because you want the value of the home as high as possible, superseding the sales price, because again, whichever is less. So if the sales price is lower, then we'll just base it off of whatever's on the contract. A couple things to kind of beware of or to keep in mind when it comes to evaluating the property. If it's located within an HOA, then the bank will need to review the HOA documents, and those are called condo docs or condominium documents. And that'll include the financials, the budget, any house rules, any sort of litigation that might be happening, any sort of stuff like that. The bank will review that. One of the things that's happening that we're seeing here in Hawaii, and I'm sure it's happening in other markets as well, is all HOAs must have a master policy that covers all the common elements within the community or the project.
Master policy is insurance.
Yeah.
Okay.
Yeah.
You just said policy, but I don't if I'm a Joe Schmo, I don't know.
I'm sorry. Yeah. So the master insurance policy that condominiums or any projects or associations need to purchase for all the common elements, that's not covered basically within the 4 walls of your home. Because of rising insurance costs, that cost has become 300%, 500% more expensive. Here in Hawaii, a few years back, we had fires in Lahaina, which drove up insurance prices, and therefore the master policies became really expensive. And so for associations to be able to not have to raise the HOA dues super astronomically high, they've decided to cut corners on the insurance coverage. And when the insurance coverage is deficient, then banks won't be able to lend on it. So, just make sure that, you do your due diligence, ask your agent, ask your lender, hey, what's the insurance situation on this association? And, they may not know the answers right away because they don't have the documents yet. But once they do have the documents, they're able to review everything. They should be able to let you know, saying, hey, this is underinsured, or the insurance is 100%. It's okay. We're good to move forward.
Yeah. And just one of those things. So condo docs is like a big thing you're going to hear about throughout the transaction, but it really is in your favor to go through all 500 pages of it, because there's some nitty and gritty in there that you want to keep an eye on. But more than anything, it's making sure, yes, my board has their crap in order. You know, I'm not going to be getting into some scammy HOA or whatever. And then just realizing that special assessments can happen too. And so that's another thing we're looking for with property specific is, hey, does the seller have any special assessment going on? And what that means is a special project or an extra budget added on to your HOA for a season. So for example, in town, if they're resurfacing the pool, everyone gets slapped with an extra $500 a month for the next 6 months to pay for the resurfacing of the pool. A lot of the buildings in town are really old, like 1960s, 1970s. So plumbing is needing to be renewed. Electricity needs to be updated some places. So it's just, again, eyes and ears open, but you're not by yourself. You have us and a great team together to help get through all the paperwork. But it's definitely like a part that it can set apart a property from one another based on that alone. Yeah.
So let's talk about HOAs. Here in Hawaii, I would say maybe about 90% of most of the properties that you're gonna see belong to an HOA. Now, HOA dues or maintenance fees, as it's called, it's sort of a double-edged sword. I call it a paradise tax. It's the cost of living here in paradise. But why is it a double-edged sword? So there is that extra monthly fee. Some places I've seen as low as like $300-400, maybe even 200 something. But some places I've seen it as high as $1,800 a month. And it really depends on the age of the building, the different amenities the building or the community offers and things like that. Now, also one of the things that it does cover is, for example, here in Hawaii, hurricane insurance is a thing. If you live in a single family home, you as a homeowner are responsible for covering not just the home for homeowners insurance, but you usually need to get a separate hurricane insurance policy. And that price can range depending on the coverage and all that stuff. Now, when you're living in a townhouse or a condo as a part of an association, then the HOA dues covers the entirety of that total building policy, right? So you're only responsible for covering what's within the four walls of your own home. Now, for the exterior, for the other things, the HOA will cover. And that's where the bulk of your maintenance dues is going to. It's going to insurance. Now, there are some other things like reserves and whatnot, but insurance, the master policy is going to be the biggest cost item, I think, that I see when I look at the condominium documents. So just keep that in mind that, it pays for the amenities, it pays for your insurance and other things. So, it's not all evil. And, it is a necessity here in Hawaii.
Yeah. I mean, and just talking single family style with an HOA is you can very quickly tell which neighborhoods have it and don't here. So if you don't want the neighbor to be pink and purple and yellow and green on this side or have 5 junk cars, you're probably going to want a neighborhood that has a little bit of rules and structure. Just depending on your preference. So, yeah.
This is more of a Hawaii local specific thing, but let's quickly talk about property taxes. So property taxes, we probably, I think, are the lowest in the nation, right? In terms of state. So pretty low. For like a condo or a townhouse, it's going to run about $150 up to $200 a month. For a single family, it's about $200 to maybe $300 a month. For 100% disabled veterans, your annual property tax is about $300 a month. So that's about $25 a month. Yeah, huge savings. So there's some benefit there. Now, quick fun fact, our property tax, many counties, they use the property taxes to fund the public school system in that zone or that neighborhood or the different, public works that happen. For us here in Hawaii, our public schools are funded by the Department of Education. For our public schools here in Hawaii, it's funded by different budget by the State Department of Education. So our property taxes don't go into the neighborhood's public school system.
So I guess that kind of wraps up part 3 and 4 of loans. I think that was, right? So we'll keep it going with a couple more things just to kind of wrap up this whole series, because I think this is just really good overview. But then again, when we're talking with you one-on-one, we're going to get property specific, we're going to get budget specific. And again, just turn the lights on to think, is this really a possibility for me this year? If it's not, what about next year? And how can we get you on that road? So let's keep going.